Are the markets going to continue to head higher, or are they going to come down? This is the question that all investors and traders need to focus on. In this video, we'll look into that exact question. To get your mindset correct when you trade or invest, it's really important to just pump your mind up with positivity, but also with knowledge. If you search on YouTube for @CTKS Method and go into the playlist, these songs will change your profitability for the better. These are my secret weapon. And members of the service video for this month is now out. Turning to the S&P 500 on a daily basis, we can see that the S&P 500 is going and grinding up. There is support there. We've come through one level of really intense structural once resistance, and hopefully it's flipped into structural support. So far, it's looking really good. There is another level of structural overhead resistance, and that is playing out between 64.25 and 64.39. If we continue to grind higher, we'll have to deal with this overhead structure. Those exact levels on the S&P 500, 64.28 and a little higher, 64.35. We can see that we've got lighter overhead structural resistance at 63.97 and a little bit higher at 64, well, approximately 64.06. What happens inside the stock market directly impacts crypto. If we see further upside momentum, that is very good for the crypto market, and Bitcoin is currently rallying. We know the crypto cannot escape the stock market's gravity, and so far the stock market is coming up. The blue line in the background is Bitcoin, and Bitcoin has staged a very nice pump across the weekend. When looking at the Bitcoin longs and shorts, we can see something really interesting. The Bitcoin longs have started to flatten out, and the shorts were retracing, but they've started to come back in. We've also seen some really interesting behavior inside the crypto market. Across the weekend, the alts on Saturday just went nuts. And then on Sunday, Bitcoin started its move up as the alts came down. This is actually a typical flight to safety response. In the past 24 hours, we've seen $285.4 million worth of liquidations. The vast majority have been long, and 107,000 positions were liquidated. The max loss was 4.46 on Ethereum. In terms of liquidation levels, you can see around the $120,000 mark. There is so much upside liquidity here. Typically what market makers do, they tap that liquidity and then reverse down. Now, if this is the case, just keep your eye around the 120 and then around the 115 and 111 mark. Of course, we look at CTKS Structure, but you must be aware of these other factors. The options market can also give us a bit of insight into where things are moving and where the interest is, where the open interest is. And we can see at the 120,000, we have a definite call wall and up at the 140, also at the 130. The puts aren't as nearly as confident as what the calls are. We have a very special edge inside the market. We already know where the algorithms are going to buy and sell. For example, as price was coming up, it was tapping this 117,900 level. We knew that the algorithms would sell here, and that's exactly what happened. When we saw the CTKS cut, we came up and challenged it again, and we got whacked on the head at 118,700. But we've seen this support at 117,900 hold. One thing was really interesting. Across Saturday, the alts were going absolutely nuts and Bitcoin was going absolutely nowhere. And then everything turned around. Bitcoin sucked the liquidity out of the crypto market. The alts came down. We can see some very positive signs inside crypto right now. Bitcoin is currently $119,021. It's got above that 118,700 structural once resistance level, and it's looking like it can flip it into structural support. Please let me know in the comments, what is your three-dimensional risk management strategy on this? We always know that price is always moving in a wave. It's always coming up and down, up and down. So the up only or down only ideas simply don't hold inside financial markets. But that doesn't stop a lot of people talking about it, primarily to scare the bejesus out of you. As CTKS traders and investors, we're not scared, we're prepared. We know in advance where the algorithms will buy and sell, and we look to the right. For example, if you were looking at a chart like this saying, where is the resistance on Bitcoin? Where are the key levels that I need to know going forward? That's a really tough question to answer because you just simply don't have enough information. And when we look higher, where is the resistance there? Well, we can see that we've got a lot of resistance up at this 121,200 mark, but we could get a structural overshoot of the 120 up to the 121 area. That is the positive side. That is the bullish side. But always remember, bullish can become bearish and become bullish and bearish and bullish and bearish. You get the idea. You must think in terms of waves. Inside the service for this month, I provided trades that I made at the start of the month to just show people how much money you could make by a downtrending market. I picked one specific chart, which was Pepe, which came down 25%, and I showed that you can make money in a downtrend going long at spot, and you can do really, really well. That's the kind of thinking that you want to bring in every single day. Don't need to get burnt by green fire, you need to take advantage of it. For example, retail is programmed to just get all crazy when price goes up and then just to get all depressed when price goes down. You would have seen those emotional roller coasters, Wall Street cheat sheets, all stuff, and it's absolutely misleading. If you would like a life in trading and investing that is not so anxiety-ridden, don't get caught on green fire. Understand that price is always moving in a wave and you can just stack on the way down. Buying retracement waves is a very profitable strategy. For example, there's a lot of difference in buying here and buying here as opposed to buying around here and around there. You do that enough times, it will change your financial future. I talk about this a lot in this month's service video. We know that we need to look at total crypto market cap and Bitcoin together. The two just influence each other so much. So if we're looking to the right now, where is the resistance? Where is the support? That's pretty tricky. You can use recent indicative price and try to draw up some non-statistically significant support zone, but that will actually put you on the wrong side of the trade because the algorithms are simply not there. They're somewhere else. It doesn't mean that you can't get lucky, but you don't want to get lucky, you want to be knowledgeable. So when we look at total crypto market cap, just a little bit above that 3.88 trillion, there's underpinning structural support. Now, what does that mean? If we get a rejection around there, we're coming back to here, and we would expect to find support around that area. You will see also that total crypto market cap and your beloved alts typically have the same pattern. And this is how you pair what is happening with total crypto market cap back to what you're trading and investing in. I talk at length about that inside the Profiting Masterclass. It is literally a license to print money when you know. New traders and investors always look for perfection. Don't look for perfection. I wasn't perfect when I said that, was I? Just look for reasonable guidance. When we look at Ethereum is currently 42.47, and overlaid across total crypto market cap, you can see this area for ETH is around 41.75. This is what I'm talking about. If we get a rejection on total crypto market cap here, ETH should, in all likelihood, just come back to the 41.75 area. And remember, it's not a brick wall, it's a gravitational area. As a professional trader and investor, and it's very important that you see yourself as exactly that, you must stack probabilities. You can't look at one chart and stack a probability because you're looking at one thing. To stack something, you must have more than one, and you should have 3 total. For example, total crypto market cap, Bitcoin, and your money chart. That is your basic bare minimum to stack anything inside crypto. And you must be aware of the structural levels as well. Zooming out a little bit, when we look at Bitcoin over quite a number of months, we can see that we are definitely in an uptrend. Even if we got a movement back to $93,000, the upward positive trend would not be broken. In fact, we could go down to 81,000, nearly 81,500, and the positive trend would not be broken. Now, of course, if that happened, the alts would bleed like hell. People would become so incredibly bearish and probably capitulate at exactly the wrong time. But not us. We can make money in downtrending market consolidating markets and uptrending markets. That is proved conclusively through this month's service video. Let's get into the cheat sheet and understand the key levels that you need to look at. The volatility gauge of the market, the VIX, having a look into row 1, we can see that the VIX is under negative price momentum. This is really good for markets. This is pushing markets up. But if we get a movement across around that 1554 level, start to change your idea of continuation to the upside. It's more important that we prepare. Please do not get scared. Getting scared doesn't help your profitability. In fact, it destroys it. When we look at the DXY, we have a very, very interesting thing going on here. We'll need to keep our eye on the DXY in the next 24 hours. That is weird. JP Morgan says 4 rate cuts towards the end of the year. And what does the 10-year and the 2-year do? The exact opposite. It rallies. What does that mean? We just have to be careful of the news. What about dollar yen? Dollar yen is very excited. It's going for it. What about oil? Okay, oil is getting really wobbly. Keep your eye on oil as well. Those wobble factors are probably why people are just piling into Bitcoin at the current time. When we look at junk bonds, so we're now in row 2, junk bonds, the euro dollar, the Aussie dollar, copper, silver, and gold. And a lot of interesting stuff happening in terms of gold tariffs. But gold is pretty much saying, meh. Another level that you really want to keep your eye on in terms of this area inside junk bonds is around this particular part. That is the 96.74 level. If we start to see junk bonds getting above that area, everything is confirmed. That is good stuff. Which raises the question, what would bad stuff look like? It would look like an underside retest of the 96.65 area. I was mentioning a couple of videos ago that typically when gold and silver rally, they tend to pull Bitcoin along with it. So that's why looking at the commodities is not a bad idea. If we start to see weakness inside the commodity space, for example, if gold comes down and especially if silver comes down. Now, why did I say especially? Gold tariffs are causing a lot of anxiety around gold at the current time, but silver is a little bit independent. They are, of course, interrelated, but the idea is that if gold comes down but silver just maintains itself, even goes up, that is more a sort of a macroeconomic issue. But silver continuing onto the upside is likely to push junk upwards, and the VIX downwards, and the main markets upwards, and crypto upwards as well. In other words, to actually understand what is going on inside global markets, you must stack probabilities. Nobody is taught to do this except institutional players. And typically, retail will look at something like this and say, oh, that's too hard. I would just prefer to go all in and more, especially when it's gone up 90%. If you've been caught in this kind of thinking, it's really normal because the majority of YouTube influencers literally haven't been inside financial markets for nearly 40 years. And a lot of them don't come from financial backgrounds. We're also seeing some good news with copper. Look at copper, it is going for it. Let's have a look into row 3. Now row 3 is incredibly important, which is the S&P 500, the Dow, the Russell, and the Nasdaq. A lot of people doing just recent indicative price analysis would say the most important level, and they would use the word structure, which is a no-no, is 63.93, and they'd be so confident about it as well. Now, why is structure a no-no if you do RIP, or recent indicative price analysis? You're generally looking at a very small time frame, making an assertion that that is somehow important. And was it important before? The only way to tell if something is important or not important is to do all of structure. Now, the structural overhead resistance is higher than that 63.93. In fact, it's around that 63.97. So when you consider this, a lot of people would FOMO in and say, oh, we're breaking up to new time highs, and then get whacked in the head because all the algorithms are sitting up there saying, please enter. I'm going to sell you down. This is why we must look at structure. What about the structure on the Nasdaq? Let's have a look at that. We're seeing that there's overhanging structure pretty much where recent indicative price structure would be. But the issue is we don't get sucked into RIP. We know what it does. It RIPs your account. But the issue is there's a few more upward levels of structure that we would have to address. It's not all clear sailing. This is just the nature of financial markets. This is why price is always moving in a wave. And you can see there are a couple of levels of structure at that 21,400 level as well. A lot can happen in the crypto market in a small amount of time. And what have we seen here? We were rallying up on green fire and then all of a sudden, ping, and we're just retracing at the current time. This is why it's so vital that you keep your structural levels in mind at all times. People would have actually been piling in as Bitcoin just romped up here, and they would have been all liquidated in all probability. It is the nature of people to go really hard, really fast, unfortunately at the wrong times. Knowing where the actual structure is vitally important, and when we look at row 6, we're into Litecoin, Binance Coin, Bitcoin Cash, and Ethereum Classic. You can see for Litecoin, we came up and challenged the 125.50 structural overhead resistance, structural failure, and we made our way back to the lower structural support level at 123.30. Knowing where to buy and where to sell is incredibly valuable. Also, you can see Bitcoin Cash absolutely took off until it hit overhead structure, and then it's making its way right back down again. That good old green fire, that can really burn like hell, so please be aware of these things. Just make sure that you understand where the structure is in advance, because you can inhabit those areas. And it's pretty interesting, when we look at Ethereum Classic, that overhead structural level around that 2320 has been a bit of a problem for Ethereum Classic to get through. Getting into row 7, which is ADA, Cardano, Solana, XRP, and Dogecoin. The levels to watch on ADA, we can see up here at that 8077, that is overhead structural resistance, and it plays in. If the sellers come in here, the algorithm's action, they typically push it down to the lower structural support levels, where it has to make a choice. Is it strong enough to get above? And that largely depends on what Bitcoin is doing. So we can see these lower levels around that 79.65 mark. So 2 levels to keep your eye on. When we're looking at Solana, we saw that we didn't come up to this 184 level and challenge that. It was too much. The sellers were just too great at the current time. We did hold on to the 182.67, but we're starting to just lose that particular level. What matters here is what Bitcoin does. If Bitcoin just curls down, Solana will go down with it. If Bitcoin finds structural support, and that depends on Bitcoin and total and a few other things as well, we could rally up. This is how you want to look across the market. A lot of people will say, oh, I only trade Solana or ADA or Doge or XRP. I'm not looking at anything else. Hey, caramba! That's probably not the best strategy if you want to make money and also keep it. Having a look at Dogecoin, we can see here, now if we were just to turn off the levels, we can't really figure out where anything realistic is. But if we see what the levels are, around that 23,531 level, that overhead structural resistance, that the algorithms came in here, sold it down. Where did they sell it down to? The 23,156 structural support level, and then pushed it up. Of course, everything depends on Bitcoin's directional momentum. Always keep this in mind. And Bitcoin's directional momentum depends on Bitcoin structure and total crypto market cap structure as well. The big thing when we look at XRP is basically this structural level at 318.12. 318.12 is very important. We have a lower one at 317.01, but these two levels, keep your eyes on that. There was terrific news on XRP. The SEC has finally gone away and leaving XRP alone. The case has been resolved. But like everything we know, it's all about structure. If we can't get above a structural level, we're going to the one below. And if we can get above a structural level, we're going to the one above. Very simple rule, applies to every chart. Price is always moving in a wave, but so far we're seeing constructive signs of more upside positive action. But always remember, big moves up need to consolidate. And your secret weapon can be my secret weapon as well. Just playing these songs is an absolute game changer. And of course, they're completely free. But the boost to your profitability will be noticeable. I literally do not trade without playing these songs. Please let me know in the comments, where do you think the crypto market will be headed, and also the stock market, because they are very interconnected, in the next 24 hours. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.